Bumsted, a livestock market analyst, joins us. Kyle, mixed across the board today. Tell us more.
It has been mixed here for the most part. We started off in this cattle complex. We started off lower. We sold off somewhat aggressively. I wouldn't call it too aggressive, but we did sell off here. We did put an open price high in. That was our highs of the day here up until just now, and we've made new contract highs here in this August live cattle contract here. We're at 213. The June contract sitting at 217 right now. It looks like it's going to, if we can hold on to this 217 area on a closing basis, then it looks like we could squeeze a little bit potentially higher here. We've seen some early cash bids. We've seen some early cash trade. We've seen some 360 dress trade here in some areas on certain quality cattle, but a lot of 225 to 227 has been bid on a live basis, and that 355 to 360 has been bid on a dress basis, which would be steady with last week, but I think the market could be higher than that here once we get into it, finally get some cash trade of some decent numbers. Now, on the feeder cattle side of things here, the index today looks like it's going to be about steady to maybe up a penny. And I'm really watching here towards the end of the week. We're seeing a lot of commercial bear spreading in this feeder complex right now, where the front months are lagging the deferreds. The deferreds are all rallying while the front months are just kind of sitting here subdued. And case in point, we've got May down about 25 cents. And what I'm watching for specifically is how the end of the week goes with our Texas, Oklahoma, and Kansas direct feeder cattle sales, our Southern Plains sales, versus here our northern sales. We're going to be losing some of our our big northern sales here from last week. So that could potentially pull this index down just a little bit, but how much still remains to be seen. So on the grain side of things here, we did hold the 440 area. We dropped down to it, tested 438.5. We held the 440 for now so far, that round number here that everybody likes to watch in corn. We're at 447 now, just a quarter cent or right about a quarter cent off our highs of the day right now as we sit.
Livestock market analyst Kyle Bumsted. Contact Kyle at 308-708-7340. Do remember, trading of futures and options involves risk of loss. With this Grain IQ Minute, I'm Alex McIntyre. You might give yourself an A+ when it comes to grain production, but how would you grade your farm on marketing, profitability, budgeting?
It's extremely important to at least have somewhat of a handle on your costs and cost of production. And again, I know there's assumptions you need to make on yield, but I just have had a lot of producers over the years that really don't know where they're at.
Brian Splitt is the co-founder of agmarket.net and just one of the dozens of guests featured in the Grain IQ podcast.
You have to make some assumptions ahead of time, and then you can always change those assumptions as the marketing year rolls around. You get into July, you get some rains at a good opportune time, maybe you up your yield estimate.
Grain IQ, the grain marketing podcast helping you be more profitable. Subscribe and listen on Spotify, Apple Podcasts, YouTube, or the Rural Radio Podcast Hub. Grain IQ is brought to you in part by Nebraska soybean farmers and their checkoff.
Chad Moyer with you now on the Rural Radio Network. Let's take a look at our midday market quotes. Before we do that, news out just within the last half hour here. Energy Information Administration announces that ethanol production for the week ending May the 9th came in at 41.7 million gallons daily. It's the lowest volume in about a year. Output 0.7% lower than the same week last year, even with the 3-year average. While that was going on, ethanol stocks climbed by 1%. 25.4 million barrels. Here are the latest numbers on the Chicago Board of Trade. July corn, 2 3/4 up at 4.45 1/4, and September down 3/4 at 4.27. December down a penny at 4.40. July soybeans are up 3 3/4 at 10.76 1/4. August up 2 1/2 at 10.72 3/4. New crop November beans are a half lower at 10.59. July soybean oil is up 21, 51.69. July soybean meal down 80 cents a ton, 2.92.50. Over in the wheat pits, July KC wheat up 9 1/4 at 5.21. Chicago, July wheat is up 5 1/2 at 5.22 3/4. Minneapolis, July spring wheat 3 3/4 down at 5.77. Livestock futures on the mercantile higher in cattle, now weaker in the hogs. June live cattle 205 higher, 218.40. August up 267 at 214.30. October up 230, 210.75. August feeder cattle 152 higher at 307.52. September up 172 at 306.77. October feeder cattle 172 higher at 304.72. June lean hogs are down 65, 98.85. July down 42 at 102.77. August hogs down 27 at 101.85. June class 3 milk futures up 7 cents, 18.85. That's markets on the Rural Radio Network.